All right, before we jump in, just the usual quick reminder. This is all for educational and informational purposes. It is absolutely not financial advice. Please always do your own research.
Welcome back, everyone. Today, we are diving into day 76 of the Plazm Protocol. Now, this is a big one. It's the day many of us have had circled on our calendars for a while now, the first major cliff. You can think of it as a huge stress test for the entire system, and it's all happening just 48 hours before the main event on day 78.
And yeah, there's just no way to sugarcoat this. The immediate impact has been pretty severe. As you can see, the Plazm price took a nosedive, plummeting 38% and hitting a new all-time low of just 16 cents.
So the headline basically writes itself, right? The price crashed. And it's no surprise that the Fear and Greed Index tanked right along with it, dropping to 23, which is deep, deep in extreme fear territory. On the surface, the story looks, well, it looks pretty bleak.
But, as you know, we always like to dig deeper than just the price action, because the data underneath, it tells a completely different, and frankly, a much more fascinating story. So, let's get into it.
First things first, let's look at maybe the most important metric of all. What did holders actually do when the price dropped? Did they hit the panic button and sell, or did they maybe see this as an opportunity?
Okay, so here is where the story takes a sharp turn. On the left, yeah, we see that 38% price crash. But look over on the right. The number of staked Plazm tokens actually increased by 19%. Let that sink in. That means an additional 33,770 tokens were locked into the protocol while the price was dropping.
And that had this massive knock-on effect. All that new staking activity caused the total number of shares to surge by 180 million. You know, this is the complete opposite of panic selling. What this tells us is that holders are actively accumulating those T-squared advantages, you know, the bonus shares you get for staking longer, and they're locking in their positions for the long haul.
And this is the result. This chart says it all, really. A massive 63% of the entire supply is now staked. So when people were faced with a choice, sell into the fear or restake for the future, the data is crystal clear. Holders are choosing to restake. We saw this pattern back on day 71, and now it's happening all over again, but on a much, much bigger scale.
Now, this brings us to our second point, which is this really interesting paradox involving the protocol's floor price. The numbers here are super counterintuitive, so let's break this down together.
First, let's look at what seems like bad news. The base floor price, you know, the protocol's ultimate safety net, it dropped, and it dropped significantly. It went from 11 cents just 2 days ago all the way down to only 3 cents. That's a 73% drop.
And this is the crazy part, the cushion, which is just the gap between the current market price and that floor, has actually widened dramatically. It ballooned from 136% to an incredible 433%. It literally more than tripled in just 2 days.
So how on earth is that possible? Well, think of it like the tortoise and the hare. The floor price was the hare. It dropped way, way faster than the market price, which was the tortoise. This happened for two main reasons: a drop in the price of eShare, which is used in the calculation, and all the new liquid supply from today's unlock. Both of those things pulled the floor price down really fast. The result? Even though the market price fell 38%, it actually gained a huge amount of ground relative to its own safety net.
Okay, so this lower price environment has another really powerful and kind of hidden benefit. It totally supercharges one of the protocol's most important deflationary tools, the token burn.
Let's break this down with some simple numbers. The protocol has this system called buy, burn, build that uses treasury money to buy up and permanently destroy Plazm tokens. Now, back at the peak price of 95 cents, every dollar spent by this system could burn about 1 token. But today, at the current price of 16 cents, that very same dollar now burns 6.2 tokens.
The bottom line here is just wow. A staggering 490% increase in burn efficiency. This means the protocol's ability to shrink its own supply is now at maximum power, and it's kicking in at the exact moment the market is feeling the most pressure.
So, when we put all this together, the restaking, that wider cushion, the super efficient burn, it all feels like a dress rehearsal, doesn't it? A preview for the main event, which is now just 2 days away.
So here's what the next few days look like. Tomorrow, day 77, is kind of a brief pause, the calm before the storm. Then comes day 78, the main event, when a massive 2.3 million PLASM tokens are going to be unlocked. And that's followed by a smaller, but still significant aftershock on day 79.
But here is the most crucial takeaway for what's coming next. If this huge unlock on day 78 had happened back at the peak price, it would have unleashed $2.17 million of potential selling pressure on the market. But at today's much lower price, that pressure is reduced to just $374,000. That's an 83% reduction. It's a strange thing to say, but today's cliff has actually significantly de-risked the main event.
So, to sum it all up, I think this quote on the screen captures it perfectly. The price impact was exactly what everyone feared and expected. But the real story, the one the data is screaming, is that underneath all that surface noise, the protocol's health and the conviction of its holders remain incredibly strong, following that same bullish restaking pattern we've seen before. And that is the key takeaway as we head into these final, crucial 48 hours. The first cliff is now behind us, and while the price chart might reflect fear, the on-chain data reflects conviction. The restaking pattern holds,